And mistake number 5, making big purchases before closing. One of the most frustrating and costly mistakes buyers make is spending a lot of money right before closing on a home. It might seem harmless. After all, you are already approved for your mortgage, so what's the big deal? But making large purchases, taking on new debt, or even changing jobs before closing can put your entire home loan at risk. Many buyers don't realize that your lender continues to monitor your financial situation right up until the day you get the keys to your new home. If anything changes in your credit, debt, or income, the lender could reevaluate your loan, delay your closing, or even deny your mortgage altogether. Let's go over why this happens, what purchases can trigger problems, and how to protect your home loan until closing day. When you get pre-approved for a mortgage, your lender reviews your income, credit score, debt-to-income ratio, and overall financial stability to determine how much home you can afford. However, pre-approval does not mean final approval. Your lender will continue checking your finances until the moment you're officially closed on the home, and if something changes, the loan could be at risk. Here's why. Your lender could run financial credit checks before closing. Even if you are pre-approved, the lender could pull your credit again right before closing to ensure nothing has changed. If they see new debt, new accounts, or lower credit scores, this might adjust your loan terms, increase your interest rates, or even revoke the loan altogether. Any new debt increases your debt-to-income ratio. Your debt-to-income ratio is the key factor in loan approval. If you take on new debt, like a car loan or new credit card balance, your debt-to-income ratio goes up, making you look like more of a financial risk. If your DTI rises above the lender's limit, they could deny your loan entirely, even if you were previously pre-approved. A change in your income could make you ineligible for a mortgage. If you switch jobs, lose income, or change from a salary position to a commission-based job, your lender may need additional documentation to prove you still can afford the mortgage. Even a temporary drop in income can cause delays, extra paperwork, or mean outright loan denial. Many buyers assume that small purchases won't matter, but even minor financial changes can create red flags for lenders. Here are some of the biggest mistakes to avoid. Buying a new car or taking out a car loan. A new car loan adds a major monthly debt payment, increasing your debt-to-income ratio. Even if you can afford the car, your mortgage lender sees it as an additional financial risk, which could lead to loan denial. Opening a new credit card or increasing your credit card balance. Any new credit inquiry can lower your credit score, which may impact your mortgage rate or approval. If you rack up credit card debt, your monthly debt obligations increase, making your lender recalculate your affordability. Taking out personal loans or financing new furniture. Some buyers finance furniture, appliances, or home improvements before closing, assuming they can just pay it off later. Even a small loan can change your financial profile, delaying or even canceling your mortgage approval. Changing jobs or your source of income. Even if you get a higher paying job, your lender may need proof of stable income before approving your loan. If you switch to a self-employed commission-based pay or different industry, lenders may require several months of proof of income, which could delay or jeopardize closing. To avoid any last-minute surprises, follow these simple rules until you have the keys to your home in hand. Do not make any big financial changes. Here is what you should do. Keep your job and income steady. If you're thinking about switching jobs, wait until after your home purchase is finalized. Continue making all debt payments on time. Keep up with credit cards, student loans, and car payments as usual. Maintain your current spending habits. Try to avoid large purchases and keep your bank account stable. Check with your lender before making any financial decisions. If you're unsure whether something will affect your mortgage, ask your loan officer first. Here's what you should avoid until after closing. Do not buy a new car or take out an auto loan. Do not open new credit cards or take on any more debt. Do not make large unexpected withdrawals from your bank account. Do not finance new furniture, appliance, or home improvements before closing. Do not quit or change jobs without speaking to your lender. Play it safe until closing day. Buying a home is a major financial decision, and the last thing you want to do is lose your mortgage approval at the last minute because of a simple financial mistake. Until your loan has closed and you officially have the keys to your new home, keep your finances stable. If you're thinking about making a big purchase or financial move, move before closing, talk to your lender first. I'd rather help you avoid the problem now than try to fix one later. If you have any questions about the do's and don'ts before closing on your home, reach out today. I'd love to help you navigate the process and get you into your new dream home smoothly. Buying a home in Manteca can be one of the best financial and lifestyle decisions you ever make, but only if you go into the process fully prepared. Too many buyers make mistakes that cost them time, money, and unnecessary stress, and I don't want that to happen to you. Let's go over the key takeaways one more time so you can avoid the most common home buying pitfalls and set yourself up for success. The 5 biggest home buying mistakes to avoid. Get pre-approved before house hunting. Many buyers start looking at homes before they know how much they can actually afford, and that's a huge mistake. Getting pre-approved first helps you shop within your budget, makes you a stronger buyer, and ensures you're ready to make an offer when you find the right home. If you skip this step, you might fall in love with a home you can't afford or lose a home to another buyer who was already pre-approved. 2. Be realistic about home prices in Manteca. Manteca is more affordable than the Bay Area, but prices here aren't as low as they used to be. The median home price is around $650,000, and if you're looking for a new construction or larger homes, expect to pay even more. If you're on a tighter budget, you may need to consider older homes, townhouses, or smaller properties instead of expecting to find a brand new home for bargain prices. 3. Budget for property taxes, HOA fees, and maintenance costs. Many home buyers only focus on their mortgage payment and forget about all the other costs that come with owning a home. Property taxes in Manteca are around 1.2% of the home's value, but if you're buying in a newer development, you could have extra Melrose fees that increase your monthly cost. HOA fees in some communities range from $50 to $200 per month, and home maintenance costs can add up quickly, especially for larger homes or homes with pools, yards, or older systems. Before you buy, calculate your full monthly housing expenses, not just the mortgage payment, so you don't end up stretching your budget too thin. 4. Never skip home inspections. A home may look perfect, but without a proper inspection, you have no way of knowing if it has hidden problems that could cost you thousands to fix. Inspectors check the foundation, roof, plumbing, electrical system, HVAC, and more to make sure there are no major defects. Even new construction homes can have issues, so always get an inspection before finalizing your purchase. If the inspector finds problems, you may be able to negotiate repairs or get seller credits to lower your closing costs. 5. Don't make big financial changes before closing. Just because you've been pre-approved doesn't mean your loan is guaranteed. Lenders may check your credit and financial situation again before closing, and if they see any new debt, big purchases, or job changes, they could deny your loan, even at the last minute. Until you get the keys to your new home, don't buy a new car, open credit cards, make large purchases, or switch jobs without talking to your lender first. The home buying process can feel overwhelming, but with the right strategy and expert guidance, you can make smart financial decisions and avoid costly mistakes. If you're thinking about buying a home in Manteca, I'm here to help. I can guide you through the entire mortgage process, help you find the best loan options, and make sure you're financially prepared to buy with confidence. Call or text today and let's get you into your dream home without any costly surprises. And before you go, drop a comment below and let me know what's your biggest home buying concern. Are you worried about interest rates, saving for a down payment, or finding the right home in your budget? Let's talk about it. And don't forget to like this video, subscribe for more home buying tips, and I'll see you in the next video.